All right, everyone. Hey, welcome to the Hurley Investments Financial Services Midweek. It's my chance to, should just say commentary. I don't know why I keep putting midweek in there. Welcome to my commentary. Little something I like to do in the middle of the week so that you guys are able to hear what I'm seeing, what I'm doing, and why. Very, very positive or interesting week starting on. As I come through and see this, if I was to ask you what's going on, let's ask you what's going on. What's moving our markets? Why are we going the way that we're going right now? Lance, that's kind of funny. Oversold for too long. Technically speaking, we weren't oversold, but if it's okay with you, I want to just put too much negativity. How about that? The U.S. appears better than other places in our global economy. Is that fair to say there, Lance? With that, you buying that? You're okay with that? Perfect. Okay. I could also tell you it's some long-term short covering. Once we broke the 50-day simple moving averages on some indexes. I can also say stabilization in oil, and I'm going to go ahead and say China as well. You guys on board with this so far? I still look at some positions. I can't see why Disney is not trading back up to the 120s. I'm shocked. Don't get it. Don't understand it. But oh well. I'm also a little shocked that we haven't seen a rebound in some other stocks. But again, for the most part, I'm okay with where we're at. It is what it is. I found it interesting. Just a quick little useless tidbit of information. Best first day of a month in 3 years. And historically, March is a bullish month. Again, that doesn't mean squat, other than we just had one of our most bullish start of a month in 3 years. Kind of funny, inflows into mutual funds, but not with excessive volume. We didn't have some huge volume going into inflows this month. We just had some volume. We just had some inflows. It was nothing spectacular, nothing to speak of. It just literally was what it was. I don't know. You know, I don't know. It seemed to build on itself for today, which was a pretty interesting position. I'm going to go through what I was doing towards the end of the day, but it's obviously just a pretty interesting position when it's all said and done. When it comes to what's happening this week and why, some quantitative comments here. We had the Chicago PMI that came in at a 47.6 versus an estimated 52. Worse than expected. Pending home sales came in at a negative 2.5 versus an estimated positive 0.7. Worse than expected. So as I'm going through my chat here with you and going through the section, notice how you don't have better than expected economic reports, at least not on Monday. If we go off to today, construction spending came in at a 1.5 versus an estimated 0.5. Best in like 3 years again. We have the ISM index came in at a 49.5, still showing contraction, but that was better than the 49.0 that was expected. Auto and truck sales knocked it out of the park. So people are back on the bandwagon. China came out and showed lower growth on their manufacturing. So China PMI last night were lower than expected, but China offset these numbers by a 50 basis point cut in the interest borrowing rates on Friday, right? Little surprise, little boost. I should just say last week. So, little boost there. Out of curiosity, where do you guys think we're going to see our markets end this week? Take a stab. Where are our markets going to end this week? What do you think? They're going to end up higher? They're going to end up lower? Doesn't matter. Lance, higher. Okay, Lance, why? Why are they going to go higher? Ooh, near 2,000. Someone just got specific. Near 2,000 on the S&P. Why? Why are you guys saying this? Lance, don't know. Well, I mean, I'm going to find that interesting because I think it's going to go higher too. And someone stole my thunder, and it was Abraham, higher to near 2,000. And my thought was because there is no more resistance until 2,000. Market inertia. If it's okay, I'm going to steal your comment there, Abraham. I agree. I think we're going to have a run. In fact, when I look at the Dow, man, bullish with a big bounce off the 50-day simple moving average. That's just money moving back in. Need hope as well as oxygen. I don't know what the hope is. I mean, really, I look at our campaign. Bullish with a big bounce off the 50-day simple moving average. I heard some comments going over, hey, on the economic front, this is good because we're getting a better idea of who is going to be in the primaries and who we're going to vote for. And I got to be honest with you, I did scratch my head and go, not sure if I'm buying that. Not sure if I agree. But it could be. I mean, talk about reaching for straws. I don't know. Anyone get excited about Clinton or Trump. Neither one excites me. So we're not technically bullish yet and have, I'm just going to say, quite a ways to go until you get to the 50-day simple moving average. All right. On earnings tap this week, AutoZone, Dollar Tree are kind of the big ones. Ross Stores for today. Costco tomorrow with Abercrombie and Fitch. Burlington Coat Factory on Thursday with Smith & Wesson and Kroger. Joy Global also reports, but that's not expected to be anything major. Big Lots on Friday with Staples. Other than AutoZone, I'm not sure I saw this week any market moving earnings. So for the most part, I'm going to forget them. But with Ross Stores, Dick's Sporting Goods, Dollar Tree on Tuesday, Costco on Wednesday, Burlington, Kroger on Thursday, Big Lots on Friday, even Staples, I think we're going to get a little bit of a read in to some guidance opportunities with the U.S. consumer. So just some ideas to look at for I was going to say a read on GDP, but it's not. None of these are significant reads. So the reality is, not much matters. It's the second week of retail that comes through towards the end of the earnings cycle, and earnings by corporate accounts, not a big push for moving the market. What is a big push really comes down towards yesterday, which was the ISM. Really nothing happening this week until Friday. Friday we get the average work week, the non-farm payrolls. Watch us have a really good 3 or 4 days, have good non-farm payrolls, and boom, we're going to come out with, oh my God, the Fed's going to raise rates again. So that is the next shoe that I am waiting to fall, and I think that's going to happen closer to the 2,000 point or mark. So at 2,000 is when you're going to see, because of the non-farm payroll and the private payrolls on Friday, you'll see the worry of, oh my gosh, the Fed's going to raise rates again. You'll see that starting to talk about most likely on Friday. It was somewhat talked about today, but there wasn't enough reason to take it seriously. Overseas, not much is moving anything. Again, general services in China might move it, but it usually doesn't, so nothing's moving anything overseas. When I see how I'm looking to trade, I made a couple different changes today that I'm going to introduce you guys to. Today, I added short puts to the 155 March 2016 long puts on Baidu. The stock has moved significantly. So time to chase it up with short puts to maybe, I'm going to say quote unquote, maybe pay off a good portion of what I paid for the long puts to get through earnings. Took long puts off Ford, Nvidia, Zions today. And I'm looking to adjust Apple, which is just a covered call. Disney slash Visa collar trades. So I guess it's Disney, yep. Disney protective put and Visa collar trades. So I'm poised to go bullish, and I'm poised to go more bullish into that 2000 number on the S&P 500. I still think you need to be nimble. I still think you really need to be nimble as you're taking a look at today's stock market, because there's still too much uncertainty. There's still too much what if, headline risk. It just doesn't make sense. The short answer is we should not have come as far as we did today, unless you believe that or I guess the justification for coming as far back as we did today is you believe we shouldn't have fallen as much as we have so far. So there's the short and the skinny. Literally still tells me we're in a headline risk scenario, so I don't want to be overcommitted one way or the other. With that said, what questions do you guys have that I can go over? I'm sorry if this seems a little, I don't want to say slow, but a little quick. There's just not a whole lot to really go through or go over right now. Any questions you guys have? Anything I can do to answer for you? All right, are you guys back? It looks like my internet stinks again. So I just said, for those that missed, any questions you guys have that I can go over with you? Any questions you'd like to go over in regards to a trade? If not, I'm going to thank you guys. This is a little bit shorter. Usually I'm taking a full hour of your time. But again, if you look at those charts, we're somewhat in no man's land again. We've had our bounce. We're sitting right in the middle of those RSIs. I would expect us to continue to follow the trend. We're going to continue to follow the trend higher, but that does not mean that we have a clear ride out to the future. Abraham, you're still there? Did I lose you guys completely? Okay, you guys should be back now. Sorry about that. Am I back there, Rick? Can you hear me now? Am I back to you guys? I'm good to go. This appears to be on my side of things. You guys, can you hear me now? Am I back? Looks like I had a problem on my side. The PPT, the Jamie Dimon rally. I like it. Okay. Um, Looked like that was my internet, but I believe I've got it back. I was just going to ask you any questions you guys have on a trade, any questions about the stock market. Otherwise, obviously, this is probably a better one for me to call on early quits too. There's not much going on that I can help, that can be helpful for you guys at this time. I was just going to point out we are kind of in no man's land because of where our stocks are going, but I would think that they're going to follow the trend. All right, 2 questions. Since going to China is a possibility, Baidu and Alibaba, yes, I'm looking at both of those. I trade both of those. Looking for a car on a company continuously making money. I thought of BKRB. So let's take a quick look. I've traded Baidu for forever. Fabulous company. Baidu is making my year because I've added like 400 shares in the last 3 or 4 months. Look at that chart. Easy way to make great money on Baidu right now. Berkshire, I would not be doing the Berkshire Bees. In all honesty, you can't really protect them. I think you'll make more money on the S&P 500. With that said, obviously it's trading higher year to date, but I wouldn't be in the Bs. I think you've got better opportunity in other places for that money. What do I mean? I'd be trading Baidu over Berkshire right now. Look at the charts. Look at the difference between the two. Already at all-time highs. You've right now got 37 points up to highs on Baidu. Alibaba, I do trade these guys currently, but I'm just beginning with them. They haven't been around long enough for me to feel comfortable, so I wouldn't be going into Alibaba any more than 300 shares. And boy, they smacked right up against the 50-day simple moving average today. So Baidu is I've probably made more money on Baidu than any other individual stock that I've traded, especially in the last decade. From 165 up to 770, back down to $70 a share up to the 170s today. Fabulous stock, good growth opportunities. And again, I know Berkshire is Warren Buffett, but it's not so much Warren Buffett, especially the B shares. He's got his 3 generals in place right now. 2 of them are really well known. I just think there's better money elsewhere, but that's a personal opinion there, Abraham. Good questions, by the way. Thank you. Berkshire could be an easier one to follow trends, but those same trends you'll see on the stock market. Any other questions for you guys? Lance, what do I think of Apple? I do think Apple will be higher by the end of the year. So I think I've got some June 100s on that I'm probably rolling out and up to June 120s, the January 120s, or maybe September 120s. I'll see what my numbers turn out to be. But I think Apple will be higher towards the end of the year due to new product, iPhone 7. I have been running them since earnings expiration a week ago. I've just been letting Apple go with a June 100 short call. And if you look at Apple right now, Lance, dang it, if Apple didn't finish above it, if it goes that way tomorrow, I'm looking to having to roll some short calls, but I can wait a day or two. I'm still in good shape. So another good question there on Apple, but I'm looking to get out of Apple. I want to be at Apple closer to that 120 range and shift some money over to Facebook, something like that. So my thought process there. Netflix. I do have a couple people that are in Netflix. Made good money on the way down, but the key is the 101. If it breaks that 101 level, I got to pull things off and let it run up to the 115 to maybe as high as 130. Scary one to play on Netflix. It is not one for the faint of heart. All right. Well, hey, guys, if that's it, I appreciate you being here today. I look forward to seeing you next week. Sorry it's so short. As the new trends occur, I guess it takes me a little bit longer to see why they're occurring and why. Appreciate you being here. Good day to be here. Thank you very much. And guys, look forward to seeing you next week. Talk to you soon. Bye-bye.